In this video, I am going to talk about the different types of job profiles related to quantitative risk management that you will come across, and then I'll discuss the different types of skills that you would be expected to have while appearing for the interviews for this kind of jobs. So quantitative jobs in risk, particularly in banks and insurance companies, can be broadly divided into model developers, uh, model validator jobs, model auditors, model implementers, stress testing analysts, data analysts working in risk and finance areas, quantitative developers, and so on. If these are broad classes, of course, there will be different variations based on the types of bank. You know, which you all know, risks are basically credit risk, market risk, LM risk, counterparty credit risk, cyber risk. Right. Okay. The first one we'll talk about is the credit risk model developer. So as a credit risk model developer, you are expected to build a credit risk model, as the name suggests, which could be the probability of default model, LGD, EAD model, economic capital risk models. You're expected to know the IRB methods of building models. IRB stands for the internal risk rating based approach, which is given by the Basel norms, and you need to be familiar with these norms to be able to build these risk models. You should be familiar with the Basel rules, the different regulatory frameworks like CCAR, PPNR, the accounting regulatory frameworks such as IFRS and IFRS 9 in particular, and so on. The qualification that is required is a master's degree or a PhD in any of these quantitative areas such as economics, finance, physics, statistics, mathematics, engineering, and so on. So one should have sound knowledge on credit risk model building with the help of IRB. And it could be that sometimes it is on retail risk, sometimes on wholesale. Wholesale means it's the bank is actually catering to more of companies or organizations rather than retail customers. Strong analytical programming background with MATLAB or sometimes SAS. Many banks use SAS as well. So that's what is also required. Next job profile that we'll talk about is the model validator job profile in credit risk. Of course, model validator job profiles can be there in many other areas of risk, such as market risk, operational risk, and so on. So model validation is basically about reviewing the model rather than building the model by yourself. So you won't be building models, but you will be reviewing if the model has been built properly or not. So model review is something that is done on monthly basis, sometimes quarterly basis, sometimes annual basis. Findings. Okay, so the work will involve more of understanding of modeling rather than having experience of modeling. It's always good to have the model validator having some experience in model building, but it is not quite expected. That means you should be familiar with what the models are rather than to be able to build them. That's not what is important in such roles. So you should be familiar with all statistical methods, all econometric modeling techniques used in credit risk model building. So you should be familiar with the PD, LGD, EAD, and all the capital calculations models. You should have strong experience in any branch of risk modeling. The way most banks and consulting company hire for model validator is that in case of model development, they are very specific about your skills. That means they want you model development experience. But in the case of model validation experience, they are flexible to hire model developer as model validator. They're also flexible to hire a market risk modeler to be a model level validator in credit risk. Also sometimes require you to know some of these tools used for model implementation, some of the proprietary tools like FICO model builder and so QRM sometimes. Okay, many of these ALM tools and all. So if you're familiar with that, that adds value to you. They also require you to know programming in SAS, R, MATLAB, SPSS, sometimes Python and all. Stress testing quantitative roles. Okay, so stress testing is more or less similar to model validation. It's about knowing whether the model is going to perform well or not in stressed scenario, different stress scenario, and you see the model is going to be stable enough for the future use or not. Okay, so you need to have these macroeconomic scenarios and some the bank specific scenarios, internal, external, regulatory scenarios, and you will test model the risk models whether these models are going to perform well or as expected in the different scenarios. And in case it doesn't, then you should suggest the remediations. Okay, so that's what stress testing people basically at a broad level do. Of course, it would depend on what kind of financial products or models that you are working on. So what is expected in these kinds of roles is that you should be familiar with the particular type of modeling area for which you have been hired. For you have been hired for a stress testing role in credit risk, you should be familiar with all the credit risk models. If it is stress testing of market risk models, then you should be familiar with that particular type of modeling area. So here, this particular role is for PPNR. So those who are familiar with the US regulatory systems, so PPNR stands for pre-provision net reserves or net revenue. PPNR work system, one should be very familiar with. That's what this particular job profile is asking for. The job profile you're asking is that you should have advanced knowledge of Excel, knowledge of SAS. You should be very familiar with stress testing and CCAR, which is one of the regulatory guideline in US by the Federal Reserve, and Basel III, and so on. So this is one area where if you are familiar with model development and model validation, you can easily get into a stress testing role. That's not should not be an issue. You can always keep switching areas if you want. Model monitoring. Model monitoring is often not well known outside the banking and insurance industry, because many of these models in other industries are actually not monitored once they are implemented. But in finance or in banking in particular, models are always monitored for the performance. Now, you might wonder, how is model monitoring is different from model or model validation or model review, because anyway we are reviewing the models on a quarterly basis. But many times the model review happens on quarterly or half-yearly or sometimes annually. But model monitoring is something that happens on a daily basis, on fortnightly basis, on weekly basis, and so on. Who work in such areas, they constantly keep and watch on the performance of the model which are already in production. In develop experience in model monitoring, if you have experience in any other area of risk modeling, that's also quite fine. And again, pretty much like other roles, if you have a degree in numerated subjects like economics, finance, statistics, and have programming experience in R and SAS or Python or MATLAB, that's always a value add. Credit risk analysts. So these are people who normally do not work on modeling, or rather nothing much to do with modeling. They do not need to understand what models are, but they work in the periphery. Okay, so they basically collate data from different databases, prepare data. Sometimes they talk to model developers and validator to get the data requirement and supply them with the data, the required data, and so on. Statistical softwares like SAS, R, SQL, most important, PL SQL, databases, knowledge of databases, and so on. Knowledge of any of these commercial credit data, external third-party credit data, systems like Experian, Equifax is something that is important. So for this particular job profile, you can see this is a credit risk analyst. You can have same risk analyst profile in other areas of risk as well, such as market risk or cyber risk and so on. All right, model implementer then. So these are people who actually implement the models. So these are people who are not expected to know modeling or rather understand modeling. So there will be a business analyst who will explain the modeling techniques, the modeling rules, and the business rules to the implementers, and they are the one who are going to implement in the productions. So what's expected in this particular type of role, as you can see here, that you should be strong with Excel or VBA if it is implementation happening on VBA platform, on Excel, XML, R, Python, any other general purpose programming language such as C#, or Java, or .NET. So depending on what is the platform used by the bank or the insurance company, you'll be expected to have that expertise in the relevant technology area. But remember one thing: if you're a model implementer and you know, or you have some experience with modeling, you understand modeling, your value will be much more than somebody who doesn't know about modeling. Okay, so whether it's pay, whether it's your career improvement, career growth, it is going to be much better than somebody who is simply a programmer but is not aware of what the models are and how they're built. Model audit. So I'll talk about a model audit in credit risk. So this particular job description is for model audit role in credit risk area. So model audit is again more of an pretty much like any other audit that you might have heard, but it's just that is related to only uh, the statistical models used in different risk areas or risk functions. So this is different from model validations where you get into the details of the model tools, techniques, everything used. But here you are more concerned about the definitions of different aspects of the model, whether it's from the bank point of view, whether from the regulatory point of view, government point of view, and so on. So you do detailed audit analysis of the different model and risk parameters. You document everything that you find. In this particular area, you need to be good with PD, LGD, EAD, or capital, all types of capital models, because it's a credit risk model audit role. There's people and so on. Qualification is again, as you can see, you have to have a qualification. Any of these quantitative area, whether it's finance, business, economics, statistics, maths, and so on, engineering. Familiarity with model regulatory model building documents is quite important. As you can see, one should be familiar with the audit requirements in Basel or any of the state specific regulatory requirements, such as in US the Fed has this SR 11.7 document for audit and validation purpose, and so on. So such experience is important. One should be familiar with the different type of risk strategies, model development, VAR, and stress testing. So people will be interested to know not just statistical model but also some stochastic mathematics and so on, because that's what is quite important. Secondly, you should have good experience with a particular type of financial product, whether it's interest rates, whether it's particular type of derivative, uh, and so on. For this particular job profile, you can see they have asked for should be familiar with market risk technology, market risk coverage, the value at risk models, the stress value at risk model, IRC model, and you should have some quantitative research experience, should know what model risks are. Very quantitative education in maths, physics, or mathematical or quantitative finance. You should be familiar with Python and C, C++. So in market risk, unlike in credit risk, where SAS and R are the dominating programming languages, in market risk, Python, C++ are the dominant programming languages. So the two main difference between credit risk roles and market risk roles are basically that here you would be expected to know C++ or Python. You also need to know the stochastic methods and so on, not just the statistical modeling techniques. That's very important. It's also important to have Monte Carlo simulation, probability, very high or in-depth knowledge of probability, Monte Carlo simulations, Brownian motion, and so on. So familiar with all the market risk models. You need not have built these models, but you should be able to understand them. Again, a qualification in mathematics or quantitative finance is also mandatory. Again, programming languages, C++, MATLAB, R, and so on. Counterparty credit risk. So this is something that is closely related to market risk. Many departments in market risk, they actually take care of counterparty credit risk as well. So this is more to do with the derivative areas rather than the retail areas of banking, where you would be expected to know the CVA, credit value adjustment, DVA, and how to sort of use them as for pricings and so on, and how to measure them, how to forecast risk because of counterparty defaulting and so on. Highly mathematical, because this is very highly mathematical. You will be using stochastic methods. You will be less using statistical regression techniques. You will be more using Monte Carlo simulations, Brownian motions, these areas. So one should be really familiar with the maths, particularly stochastic calculus, solving partial differential equation, be good with numerical methods of probability theory and so on. General purpose programming language, C++ in particular is quite important. Python nowadays is also getting attention. ALM Quant. Um, so ALM is one major area in any banking or insurance companies. So ALM stands for Asset Liability Management. So basically there are two types of risk related in this. One is liquidity, other one is interest rate risk. Interest rate risk. Okay, this is called liquidity risk LR. This is IRR, interest rate risk. Okay, so you basically build balance sheet forecasting models. You also deal with the net interest income, and you build model around that. You build models related to interest rate risk measurement and quantification of interest rate risk, liquidity risk, prepayment, model building related to prepayment. Yes, education in finance, math, physics, engineering, that's what is common. So nothing special about it. So familiar with programming and good experience in this particular area is what is important to get into more of experience roles. Similar roles in insurance also you can find, except the fact that in insurance the regulations will be slightly different. You will have solvency, and you have solvency 2, which is what is important in insurance area. The qualifications or the skill sets that are required in banking for banking ALM quant is similar to what you would be expecting in insurance ALM. One of the most highly challenging role within banking, and pricing, particularly for derivative pricing, is highly mathematical and something that requires a deep mathematical understanding beyond just simple statistical regression models. So for this particular role, you can see the company has asked that you should have some experience with derivative pricing for front office, because you'll be working with traders and so on. They will be helping out, telling them what should be the price of a particular financial product, whether it's a trading product, because that's what front office people do. Okay, you'll be writing C++ pricing libraries which would be used by in the front office people. Good knowledge of any of these area, whether it's fixed income, interest rate, credit, commodities, foreign exchange, and so on. Highly mathematical, so they would expect you to have either engineering, science, or physics background or computer science background. Good experience with C++, C#, Python, SAS, R. These are not used mostly in pricing areas. Okay, some experience with financial modeling, that's what they're expecting. As I've said, it's highly mathematical, so you should be familiar with stochastic processes, pricing of derivatives, such as use of Black-Scholes models and so on. You should be able to solve partial differential equation, numerical optimization. Validation. In model validation, you don't need to build the models, but you would be expected to know everything about the model. Okay, so some experience with development always helps, but even if you don't have experience there, you are familiar with the theory of the model building and you have seen how the models are built from outside, even that is fine. But experience with some C++ programming and being good with any of these mathematical area, Brownian motion, Monte Carlo simulation, finite difference methods is always helpful. So quant developers are also very similar to what I discussed previously, but these are people who are specialists in implementing models and implementing models using more general purpose programs. They build softwares, actually. Basically they build softwares by taking inputs from the model developers. So model developers build models and then they send it across. So these are the people, quant developers are the one that build softwares around these models so that business people can easily use them. Okay, so they basically work as intermediary between model developers and model users. Model users directly cannot use the outputs from model. They will rather need a software which is going to automate everything. So they are the one who automate. Okay, ML specialist in front offices and many different risk functions. So this is pretty new. Even 5 years ago, there were not machine learning specialists in risk areas. Not many, so far I know. But nowadays, people with good ML or artificial intelligence development experience, people who are more inclined towards machine learning than statistical modeling, are also quite in demand in risk functions, especially in pricing. and especially in fraud modeling, in credit approval, in application scorecard development. These areas, anti-money laundering, and so on. So these areas where ML specialists, machine learning specialists are in great demand nowadays. So this is where people are flexible, but then if you have experience in computer science, you are familiar with the data structure, algorithms, then it's always good. Experience with MATLAB, R, Python, C++ is always important. Experience with big data tools, the deep learning frameworks like TensorFlow, Theano, Keras are always needed, right? So this is something that is evolving, and more people in this area are in demand in this area. In fact, many people from other areas of risk are now switching to this particular area because this is getting a lot of attention from the senior management nowadays. Cyber risk, it's not often talked about, but cyber risk is probably one of the most important risk area in any bank and insurance company. Data theft is the biggest risk that one could have nowadays, especially in the world that we live in, where there is always a potential chances of being a cyber threat, where the bank can lose data, important data, uh, and it can be in trouble. Cyber risk is very important, and in this particular job profile you see that people with actual background, people with experience in other type of risk area are all also welcome in this particular area. So cyber risk wasn't a very important area of risk some time ago, but with time it is getting attention, and more people are also in demand. So experience in catastrophic modeling, actuarial science are also quite important, because cyber risk is something classified as rare event cases, where event don't happen quite often, but when it happens, then you incur a great amount of loss. So people with catastrophic modeling from insurance industry are something they can relate very well. Yeah, so this is also statistical modeling. One should have good understanding of insurance data, and modeling, survival modeling, regression modeling, survival analysis, um, and experience with R, Python, SAS, MATLAB. So these are the requirements. Now we have seen many areas of risk and what the requirements are. We have gone through many of these uh, you know job profiles. So what are the transferable skills? What are the common skills that one can focus on? One is statistical modeling. It's there everywhere, right? We have seen statistical modeling is important in all kinds of job profiles in risk. Machine learning, new area, rather not a new area. Has been there for many decades, but in risk area, it wasn't that popular. But nowadays, it's becoming very popular. Scorecard development is something that's heavily used in many areas of risk, whether it's insurance or banking. So one should be familiar with scorecard development. Understanding of theory of probability and statistics is very important. No matter which area you work with, you will be asked questions from these subjects. Finance, risk management, economics, especially macroeconomics, without question, very important. You will get few questions from these areas. Excel, VBA for data handling, SAS, MATLAB, R, Python, any of the statistical software, Java, C++, CSAP, the general purpose programming languages. These are also important most areas. So if you're planning to have a career in this particular area, then focus on these skills. Learn statistical programming, machine learning, probability and statistics, learn about finance, risk management, macroeconomics, learn about data handling tools, SQL. You could also learn a bit of big data tools, and then be familiar with MATLAB, SAS, Python, or R, one of them at least. If you're good with one of the general purpose programming language, that's always very strong point in your resume. And make sure that you have at least a bachelor or a master's degree in any of these quantitative areas.